Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Stefen, do you have any ability to do any back testing at all, or what would be the best way to do something like that?
Basically, what I do is I actually go to your website. Let me see. Okay. Let me go to the ISE website.
Okay.
And I actually use the ISE's calculator to make some yeah. So what the way I back test is, like, people always say, like, hey, what happened? You know, how do you know, like, you know, what's a good time to sell volatility? So let's just say, like, you know, this year you're like, hey, let's use the whatever stock we can use. Let's use which one should I pick? I guess I can use the British pounds. We're already there.
Try the Canadian. Try CDD.
Canadian. All right, sounds good. Okay, so Canadian, you can see, like, November 21st. Right, the volatility was relatively high. So let's say at this point, you're saying, okay, let me actually show you the volatility chart right here. So, like, this is the 30-day right now, 60 and 90 days. So we actually have volatility. So these are the longer term months, and you can see on November, it basically has been highest it's been in 2 years, both the front month and the back month, right? So let's say, like, at this point you're like, okay, I think by February or something, you know, it's not gonna go that, it's not gonna move too much, but the volatility is too high. So let's actually type in, and this is on the ISE website, so you guys can actually go and check it out. And this is the calculator right here. So on this day, so on November, let's say the stock looks like it was closed around 129 or 130. So let's go over here. You know, the strike price, let's make it 130. Let's make the underlying price 130. So you're actually selling the at-the-money straddle, right? And you can see, let me go back real quick just to show you guys what the volatility was on November 1st. If you look at the box, you'll see on the right side, you'll see the IV90 was 22. Right? So
right.
So I actually put in 22, and then I ask it to calculate. Right? But the expiration is 3 months away. So let's say you're using, like, a, you know, I'm just pretending it's March, so I'm, like, actually using this to run it forward. 22. Oh, it keeps adjusting. So I know people think, like, you know, everyone knows exactly what to do, but the way I'm doing it is exactly how professionals, they have to put in the time and figure out themselves. So you can see the bid and ask. So theoretically, I don't know exactly if it was this price, but you can see it's like $22, that straddle.
Right.
You know what I mean? I mean, like, $22. So what I do is, like, okay, let's say I pretend I sold a straddle right here, and then I basically move 4 months forward, and I go, hey, I wonder what the stock price was, and closed at 124. So basically the stock moved $5. So So, and you sold the straddle for 21.50, so you made a profit of 16.50. So that's how much you could have made selling volatility. Now, I realize, as a retailer, you just can't sell naked straddles, or if you did, it will just take up so much of your margin. What I do is, once I know this value is too high, or that's my opinion, I'll basically sell all the strikes, and you can pick like 4 or 5 individual strikes yourself, but you're basically putting on some kind of butterfly or condor, or basically selling the meat, which is deltas that are between 40 and 60, and you want to buy deltas that are 25. So, hey, just because you sold a fat straddle does not mean that you're going to make money on it. You always want to protect yourself from the unexpected move. So what you do is you buy the wings to protect yourself. So if you sold the straddle for 22, and let's say you took $4 or $5 to buy the upside and downside protection, you could have still made $10. So I know a lot of people say, like, hey, what do I do? Like, hey, that's exactly what you do. You sell this, and if you actually thought the stock was going to go down a little, yeah, you can sell like the 22 straddle, or you can sell the 20 straddle going forward, and you would have even made more, or you would have been making a slight delta bet as well as a Vega bet. From your experience, does that make sense to the viewers, you think, Steve?
Absolutely. Like you said, even though we'd like to say, okay, we're going to sell these calls because we think they're going out worthless, or these puts, retail investors aren't going to do that, and I quite frankly don't. You're right. Butterflies, iron condors. You got to think about what makes sense, but also, what if you're wrong? And Stefen, as you pointed out, credit spreads or iron condors make a lot of sense. You're not just going to sell these options naked.
Right. And people always ask me, like, hey, the option chain, there's so many strikes, so many months, how do I know what to trade? And basically, you can follow a simple strategy. Wherever you think the stock is going, that's the strike you want to sell. Whether you're putting on a put spread, a call spread, a butterfly, a condor, wherever you think the stock is going to end up, whether it's 30 days from now or a year from now, that is the strike you want to sell, and you want to buy the strike that you think the stock is going to move away from. So people would say, hey, what's the perfect strategy for me? Well, let me see. Where do you think the stock's going to be 2 months from now? And if you think CDD 2 months from now is going to be at 110, then that's the strike you should sell, and you should buy the surrounding strikes. So that's a very easy way for you to come up with any kind of strategy across any kind of time period to put on a position that's most beneficial to your viewpoint.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.